Welcome to BizFlow Tutorials video series on accounting integration. In this video, we will cover mapping the chart of accounts. In the previous video, we discussed importing the chart of accounts from your accounting platform. Now, we will demonstrate how to map those accounts between QuickBooks and BizFlow. Uploading and mapping chart of accounts. Navigate to Setup Manage Chart of Accounts. Open the Import tab, where your uploaded chart of accounts will be stored. Each service offered, appointments, private lessons, events, etc., should be mapped to the QuickBooks chart of accounts for accurate financial reporting. Mapping services. Go to the Service tab. Services can be mapped at 3 levels. Individual services. Every single service is mapped to a specific account. This is not recommended. Category level, groups similar services under a single category. This is recommended. General services level maps all services under a single account, such as service fees in QuickBooks. The primary goal of mapping is for accurate business accounting, sales tax calculations, and financial reporting. You can customize mappings based on the level of detail required in QuickBooks versus BizFlow. QuickBooks serves end-of-year accounting needs, whereas BizFlow provides detailed revenue tracking and analytics. Mapping classes. Classes include an extra level of categorization. Class type, such as classes and events, helps in separating revenue streams in QuickBooks. Avoid mapping at the individual class level to prevent errors when new classes are added. If mapping at the category level, ensure that any new categories added in BizFlow are also updated in QuickBooks to prevent posting errors. Similarly, you may map packages at the individual or more general category level. Mapping memberships. Memberships can be mapped at the highest level, distinguishing between recurring memberships, such as monthly, yearly subscriptions, lifetime memberships, or initiation or registration fees, etc. Membership revenue should be categorized separately if needed, but can also be grouped under membership income. Mapping products. Products require additional mapping for inventory tracking. Product categories are recommended to avoid mapping thousands of individual products. Cost of goods sold, COGS, should be balanced against the inventory asset account. For example, airguns can be mapped to COGS, airguns, and inventory. Handling gift cards and guest passes. Gift cards must be mapped as a liability until redeemed. Revenue is recognized when the gift card is used for service or product purchase. Unclaimed gift card balances may need to be returned to the state after 5 years. Guest passes. If included in a membership, no mapping is required. If sold separately, you may map them under fees and services. Mapping miscellaneous payments. Shipping should be mapped under shipping revenue. Advance booking fees can be categorized under fees and services. Warranty may be under warranty and income. Loyalty points are typically managed within BizFlow but can be mapped as a liability if needed. Credit card processing fees. These can be mapped under fees and services. Trade-ins are generally treated as a discount against a new purchase, not standalone revenue. Deferred revenue. Typically, we use accounts receivable (AR) and do not utilize deferred revenue as a category in this process. Whether using cash basis or accrual accounting, AR is generally recorded under accounts receivable. However, under a strict cash basis, AR should not exist. In hybrid models where cash basis accounting is used but AR needs to be captured, invoices can be created for pending payments, allowing AR to be tracked in a designated bucket. For accrual accounting, an AR account must be created in QuickBooks to record all outstanding receivables. Restocking and cancellation fees. These should be categorized under fees and services. Bad debt write-off. This should be recorded as an expense account, such as bad debt or write-off, rather than income. Sponsorships and donations. If received through BizFlow, a designated category should be created for tracking. CFET excise tax. California and Colorado. This tax is typically posted under the same department as sales tax. Discount vouchers. Classified as a liability and tracked in BizFlow, applied as a discount for future sales. Sales tax. Must be recorded under sales tax payable, a liability account. The tax department should be created as a vendor in QuickBooks, for example, California Department of Tax and Revenue. The vendor name in QuickBooks must exactly match the name used in BizFlow. Advance payments and liabilities. Customer deposits, advance payments and store credit, these are liability accounts applied to future purchases. Tips. Should be recorded under fees and services as a revenue category. Layaway deposits. A liability account recorded as a customer deposit until services are completed. Payment processing and reconciliation. Cash payments. Initially recorded as undeposited funds until transferred to a bank account upon reconciliation. Checks and credit cards. Typically recorded as undeposited funds before being moved to their respective bank account once deposited. Pay later transactions and payment requests. These fall under accounts receivable for accrual accounting but are not necessary for cash basis accounting. Gift card redemptions. Usually recorded as revenue under services and products with no additional mapping required. Credit card and ACH payments should be assigned to their respective categories such as undeposited funds credit card or ACH payment. External payments. If payments are processed outside BizFlow, they should be categorized accordingly. Groupon transactions mapped to the Groupon account. Electronic transfers and wires categorized similarly to credit card payments. Store credit considered a liability account. Special order deposits. These remain in a liability bucket until the order is delivered. Fee deposits and forfeitures, typically categorized under fees and services. GL discrepancies. Small discrepancies due to rounding should be recorded under rounding error or inventory asset account. Vendor payables and inventory management. Vendor payables. These are accounts payable related to vendor transactions. Accounts payable must be mapped to the corresponding payable account in QuickBooks. Inventory accounts recorded based on transactions, ensuring inventory increases when making payments. Freight costs can be captured separately when paying vendors. Vendor mapping. Vendors in BizFlow must match their QuickBooks counterparts exactly. If necessary, an import file of vendor names can be used for mapping. Consignment payables. Consignment sales should be mapped to cost of goods sold. Customer purchases. Direct purchases of goods, firearms, ammunition, etc., should be categorized under accounts payable and mapped to QuickBooks. Inventory updates. Product purchases should update the inventory asset account. Department and internal expense management. Go to the Manage Department tab. Internal expenses should be categorized appropriately with a default internal expense department if no specific departments are created. Internal charges. If internal departments are used in point-of-sale transactions, expenses should be allocated accordingly. And that's all for today's video. By maintaining precise mapping and categorization in BizFlow and QuickBooks, businesses can ensure accurate financial tracking and reporting. Thank you for watching.